Welcome to the sixth episode of Portfolio Update. Quite excited for today's episode. Financial results are out and we are going to be discussing some of them. Then we will take a look at the ongoing case of GVK. As you all know, it's in my portfolio and it's going down consistently, so we're gonna see what I'm planning to do with it. Also, we will take a look at the asset class that has given 65% return in past year when everything else has gone down. Of course, the first and foremost, we are going to check out my portfolio. So let's start.
Welcome to my money universe. It's time for a new dream that doesn't involve working for 40 years, barely scraping by. Get financial life in order, find ways to save and invest more, understand insurance and tax, everything in my money universe channel.
Things are getting better in the portfolio and overall also market seems to be coming up. Don't know how long it will go like this, but yeah, this is what it is. As you can see, it is still 17% down and I haven't done any buying recently. Last stock that I bought was Suntech Reality that I bought couple of weeks back and mentioned in the last episode to all of you. I still have around 20% cash left to invest and I'm waiting to deploy the money if and when the prices fall down a little again. I want to raise my holding in Suntech Reality to about 9% of total portfolio. This company will suffer a little more because of virus, but they are very good in managing their money and choosing their projects. So hopefully they will get through these hard times sooner than later. Anyways, my investments are for very long term, easily over 7 to 8 years until unless I see the company doing something that goes against the reason why I invested in the company. My money deployment strategy has changed a little since last two episodes. Before I was buying consistently every week whenever the prices were falling and I had put in few lakhs in past few months and I'm quite happy with the prices that I have managed to go in. This will really pay me off in the future. As Warren Buffett has said, be fearful when everyone is greedy and be greedy when everyone is fearful. And this time I was able to take fully advantage of that. But now as the prices are up and the situation because of virus is still not settled, so I'm going to slow with my purchases. I will wait for a while more and until then I will just go through these companies and how they are trying to manage the crisis and just keep a close watch and not do anything at all. The only company from my portfolio that I'm doubtful about right now is GVK. I'm not thinking about selling it, but I'm waiting for few things to clear up and if it doesn't feel right afterwards, then I'm going to sell it even at loss. As I have mentioned earlier also, 30% of the times investors lose their money. And it applies for even the biggest investors in the world. But because the other companies from the portfolio do so well, that the losses become too minute to make a dent in the portfolio in long term. Just in a bit, we are going to see what's going on inside GVK. If this video is adding some value in your life, then please click on the like button and subscribe to help me in continuing this journey to show you how I'm trying to achieve my financial independence. So let's see some of the financial reports that have come out recently. I will quickly take you through them without going deep in it so the video stays short. We will start with the biggest stock from my portfolio, Rain Industries. Revenue has gone down a little and the management has already given signal that the next quarter might be worse than this. Couple of quarters here and there don't make much difference in long term investing, and with the way management is handling situation right now, it seems like they will get out of this pretty well. There are few key points that are important here. Closure of facility in the Netherlands will eliminate approximately $10 million in annual fixed cost without really affecting production or the profitability. Then they have ramped up cost reduction programs and are reducing capital expenditures where feasible and closely monitoring liquidity to ensure that they can weather the next two quarters. They still have over $160 million of credit facility left, so they have plenty of money if it is required. So liquidity is not going to be an issue. They have a huge debt, but that is payable only in 2025 and there are no payments for next 5 years right now. So from a debt perspective, they are pretty comfortable. Right now they are putting their money in expansion and building new facilities. Once these projects are completed, cash flow will be used for debt reduction. So overall, I'm fine with how the management is handling the current scenario and how they are planning for the future. I'm putting a link to the transcript of conference call. You can read that to improve your understanding of the company. If in the future price falls down below 80 rupees, then I would put in more 50,000 rupees in this company, but till then I'm not going to do anything and just sit idle. Okay, let's see the second biggest company of my portfolio, Asian Granato. The company is in tiles business and they are also facing some downturn because of the construction slowdown, and as you can see the revenue has gone down a little, but within 2 quarters things will start coming back. One of the things that are in their favor right now is the ban or the extra tax levied on Chinese goods. Because this company caters mostly to middle class families and Chinese products really harm them with lower prices in this category. So that's in their favor right now, all the Chinese ban and everything. Apart from this, they are ramping up their export also, and especially to countries who are banning China, and they have this space that was created by the ban. So Asian Connector is trying to take advantage of that. So with this momentum, they might get better opportunity to grab more and more market outside India. It's a well-run company with management conscious of how they spend their money. And also they buy their own shares whenever the price falls down, as they did last year also. And it shows a lot of confidence when promoters buy their own shares. Okay, now is the time to talk about the stock that has been consistently falling down. The infamous stock in my portfolio is GVK. They are into airport management, construction, and also in hotel business with partnership with Taj by Tata Group. As you can see, it's 63% down and things are looking quite bleak. It was already bad, but the virus, lockdown, and now the CBI scam case against them is creating a big ruckus for the shareholders of the company. The charges are that they have siphoned the amount of 805 crores for their personal use from the company and underreported the earnings. The case is still going on, and hopefully in some time we will get a better view of the situation. Till then, I'm not jumping guns and just wait and watch, but most probably I'm gonna lose money here. I was really rooting for their airport business. As you all know, they manage Mumbai's airport, which is India's second busiest airport. And plus, they also have the second airport of Mumbai to manage, and it is still yet to get constructed. But now we will see what happens. Hotel business is anyways not gonna pick up anytime soon, and most worrisome is the heavy debt that they have. Next in the line is the asset class, which has given tremendous return this year. Yes, when everything was falling, then this asset class was moving up like crazy. That is gold. Gold has given over 65% in last 1 year, and it still seems to be going up. But that wasn't really surprising, as whenever the world faces some kind of crisis, stock prices fall down and the gold prices go up. And that is because of people's trust in gold and its value. Now let's go a little deeper into why the gold price has gone up. To curb the virus from spreading, most of the countries have implemented lockdowns, and it caused a lot of economic disruptions since businesses were shut and import export was cancelled. This made people panic, and hence they started investing in gold to safeguard themselves, thinking world is coming to an end. If you see my first portfolio update, I had mentioned how in the tough times people start taking out money from the stock market, and that is what's going to happen in the future. And as we can see now, it really happened. At the end of the day, people find their safety in gold, and hence the price increase. The primary factor for the gold price is demand and supply equation. So while the demand increased during lockdown, mining was on halt. So that means people were consistently trying to buy more gold, but the mining was not happening. So the demand was more and the supply was less, and hence the sudden spike in pricing. One other factor also includes rupee price falling against dollar, and as long as rupee keep falling, the gold price will keep going up in India. So looking at this, the question arises, do you need gold in your portfolio? And if yes, then how much? Well, this is the question asked so many times on so many platforms, and the answer vary according to the investor and his or her position and what he or she wishes from her portfolio. Let's take an example of me, 28-year-old Indian earning a normal sum of money. Well, I have no gold in my portfolio and I have no debt too. I'm highly aggressive with my portfolio that includes mostly mutual funds and little of direct funds, as you can see in this portfolio. And I am aggressive because I don't have any responsibility towards my family when it comes to money. Plus, I have secured myself enough, then also I can comfortably live off the security money that I have kept on the side. One more factor you need to realize is, how is your temperament about investments? Like for me, I'm totally alright when my portfolio is in red. I mean, I opened this channel basically for that, for you guys to see an average investor's portfolio journey. I'm okay if my portfolio falls down 30 to 40%. But most of the people are not. So if you are someone who wants to go little safe but is still young and have no major responsibility, then you can have 3 to 5% of your total net worth in gold. But just like a hedge for you. And when I say gold, I'm never talking about jewelry or any physical gold. Just buy it online, and whenever you would want, they will deliver it to you. That's totally my idea. You need to form yours. If we go with historical result of last decade, then gold has delivered a little better than the Sensex. From 2009 to 2019, gold has given 134%, whereas your Sensex has delivered 130% only without dividends. So it's totally on you and your perspective on how you want to use gold in your portfolio. So I hope you have enjoyed today's episode and maybe learned something from my thought process and mostly with my stupidities. An investor's journey is like rowing the boat in slow river at night under just the moonlight. With that thought, I will take leave for today. Press the like button to support the channel and tell me in the comments below something about your finance journey or ask me if you have any question. Signing out, My Money Universe.